So every dip in here, again, looking at gold, see that? This is going to be bought all the way down to here. And I think it's going to go back up from there. If it breaks there, then I look at silver and I say bets are off. Michael's got to go back to the drawing board. But if it doesn't, I think gold drags silver up. And the dragging will be when someone says, oh, look, they're not doing QT. And that's it. There's the Goldman report on gold. Basically, they like gold for all the reasons that I like silver, meaning they look at the geopolitical risk, which we all look at now, right? But they're also saying if the Fed eases or there's QT easing, gold's going to go up. Well, if gold's going to go up, silver's going to go up more because this is a risk-on situation.
In the realm of precious metals, geopolitical uncertainties and the prospect of Federal Reserve easing are identified by Vince Lanci as potential catalysts for an upward trajectory in gold and silver prices. Gold has undergone a resurgence, breaking free from a descending channel. However, the $2,050 level presents a formidable barrier, having served as a significant point for weekly highs in August 2020 and April 2023. Despite this, Vince suggests that gold's status as a safe haven asset during geopolitical unrest might override the resistance at $2,050. Recent challenges in the silver market include strengthening the U.S. dollar and rising Treasury yields. Federal Reserve officials' upcoming speeches are awaited eagerly for insights into potential rate cut plans. Vince cites analyst Michael's perspective, emphasizing that a monthly silver close above $25.50 could mitigate concerns about the $26 level, fostering confidence in a bullish trend. Amidst thin volume trading due to the Martin Luther King birthday holiday, the current silver price hovers around $23.30, exhibiting buoyant near-term demand and maintaining its position above the 50-period exponential moving average at $23.10. Vince delves into the concept of a triple top in the silver market, noting the absence of an exact pattern, but identifying potential signals on monthly charts. Following a selling climax of $22.50, silver experiences a sharp recovery. What can you expect, and will it lead to a sell-off in the silver price? Join us as we delve into insights shared by Vince Lanci. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Now, I have been watching, you may remember, you may not remember, you may remember me talking about a triple top in gold. And everybody was talking about a triple top in gold. But I told you what it meant. Triple tops are made to be broken, and if we get there, there won't be a fourth time. That's the rule. Do we have a triple top in silver? Literally, no, but I'm going to tell you why I'm looking at it as a triple top. This is a monthly chart. 1, 2, 3. It's not an exact triple top, but it's what I like to see. I need to see 3 long wicks. I need to see them stopping out at basically the same price, same place. Then you say, well, what about all this over here? Yeah, that was a different market. That was the run to $30. That was the panic, right? And this was the retest of the panic. This is where the banks were told, never let it go above here again until we're out of the woods. And the market retested it. The bank said sold, and then whoosh, the market just rolled out. Now the market is in a different mindset. Bottoming, channel, triple top. I think the next time up there, it's going to go through there just like gold did last year. So when is the next time to go up there? Well, for that, we're going to turn to Michael's work a little bit. Right, where is that? There it is. Okay. All right. I wrote the triple top for silver. That's not him talking. I'm going to read his thing. He's looking at weekly closes. And so that's what I was looking at, but a little bit more spread out. I was looking at monthly. I'm going to read him. Let's look first again at the larger price chart picture, at least going back to 2020. A well-defined parallel channel was broken out above in early 23. Many people have noted that, and they're saying that that's a reason to be bullish. And it is, but it's, silver is not complying on the schedule that we wanted to, right? All right. Followed by a protracted but arm wrestling selling process until October, and then an upshot again, which we saw. And again, the silver bears sold a weekly close around $26, right? For the third time now. They better not let it visit there again. See that? There's your triple top. Staying with this because he mentioned it later on, but I just brought it back up here. If the market closes on a monthly basis near or above 25.50, then $26 will not matter. That's Michael's opinion, and I'm going to underline it and say I can see why he's saying that, and I agree with it.
In his analysis, Vince notes that a close above $23.76 in March signals a bullish trend for silver, but concerns may arise if the closing price drops below $23.21. Monday's quiet trading session due to the Martin Luther King Jr. holiday is acknowledged. The silver market is currently testing the 50-day exponential moving average, and there is anticipation of a potential break above the 50-day EMA to reach the $24.50 level. However, the price currently tests a support line at $23.00, indicating a possibility of negative trades unless the support is decisively broken, or the resistance at $23.70 is breached, maintaining a sense of neutrality until a more precise direction is confirmed. Vince emphasizes a possible concern if anticipated. Quantitative tightening news does not materialize. Some market participants speculate that the perception of an end to quantitative tightening is emerging, particularly in a year where the Federal Reserve is anticipated to cut interest rates after a cycle that witnessed a 525 basis points increase. Let's get back to the interview.
The basing action will occur if Friday's closing price is 23.76 or higher. Now, this is an oscillator. This is I'm sorry, I can't make it bigger right now. This is an oscillator that he has, and he puts a 0 there. Down here is negative, up here is positive, and price is in there. And I'm going to go off of his chart and show you what he's talking about. The market made a low. Let's go to the daily. I think he's on the daily now, right? See this here? This was a significant low. It took it out, right? This was a significant low here, and it took it out, and it didn't hold it. Now, normally I would say, looking at this, I personally would say, I want it to close green. And boom, the next day it closed nicely green. So I like this as a low. Now, you have to look at things like MACD and RSI, and I haven't looked at those yet, and I will to see if I agree with him. But his oscillator is probably similar, although definitely not exactly the same, based on that. And his oscillator says, well, actually what he said using his oscillator was, he has two different things going on there. I'm just going to go through them. A close above 23.76 in March says we're definitely done. And you can see what he's talking about here. He's talking about this candle being negated, right? And a close above 23.21, which puts us right around here, makes him think that we're probably going to be negated. So 23.21 makes you neutral friendly. 23.76 makes you bullish, right? 24.50, that's another number he has in there, makes you really bullish. And 25.50 makes you, I don't know, makes you what's ultra bullish, right? Because this should not last if we get to 25.50 on a monthly close. Middle of the month doesn't matter. Monthly close. All right, let's go back to what he wrote there, and let's try and translate that. Okay, so that's the basing action, 23.76. What makes you worried? Okay, I am worried if this QT news does not happen. He is worried. He doesn't say he's worried, but he says if we close under 23.21, I think it's a weekly basis, then he would get slightly concerned. And if you look at that again using my chart, a close under 23.21 on a weekly basis puts us strongly back in this channel, right? This downwardly sloping daily channel. Let's see what that looks like on a weekly. Okay, you can see what's going on here. You have a long weekly wick. You close below 23.21, and it probably just probably negates his momentum. And I'm speaking from on my own here. I haven't spoken with him yet, but I'm qualified to read at least, I think. So this trend here might be negated if we get above here. I like that, 23.21. It's a March contract, but it's close enough to spot right now for me to be comfortable with that.
With geopolitical uncertainties and Federal Reserve easing identified as potential drivers, How do you see the outlook for gold and silver prices in the current market landscape? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.